And moving into our next segment, which our long-term listeners may recognize as a new segment here for Season 4, is our Top 5. This is where Herwig and I have picked the 5 biggest pieces of news that we could find and couldn't wait to discuss together alongside our listeners here on the show. And so for the first piece of news that we wanted to break into, it comes from INX. And you may recognize INX as a cryptocurrency and security token exchange. Now they burst onto the scene 6 or 9 months ago, announcing that they had released what they were calling a tokenized IPO. And the goal here was that they were fully registered by the US and were going to be fundraising for a security token backed by a revenue share agreement in the business operations. And so INX has been currently fundraising, and they've done a successful job in really spreading the gospel of security tokens. And have been successful in their fundraise thus far. And now they've actually made headlines for another fundraiser, a piece of news around their financing, and this is that they're actually SPACing as well. So if you remember that registered IPO, we actually talked about it on the show, it's not really an IPO because it's not backed by equity, right? It's backed by a revenue share agreement of how much money that the company's making on their operations, and now they're taking the equity in the business, all outstanding shares, and that will be acquired by private equity firm Valdi. And it will be listed on the Canadian Stock Exchange. So they're taking their equity and they're listing that on the Canadian Stock Exchange through a SPAC. And then they're doing, in conjunction, the security token offering for the revenue share on their assets there and the profits. And that fundraise closes April 17th. But this $32 million SPAC is a really big deal. And I don't think that anyone saw this coming.
Just in case you don't know what a SPAC is, essentially what we're talking about here is a Canadian public company run by a private equity firm has acquired INX, which actually is a foreign company, is not a US-based company. And as a result of acquiring that company, INX is essentially going public. All the while, they're doing a profit-sharing token fundraise here in the United States, registered as a public offering, so all of us could participate in it and get exposed to just specifically the profits of the platform. So I would imagine that there's going to be some interesting dynamics, especially once both are listed and trading on secondary markets. And of course, presumably the profit sharing token by INX will be listed on its own exchange, while of course, if you will, getting exposure to the equity interest would be listed on the Canadian exchange. Interesting approach.
We'll definitely have to see how that plays out. We've seen examples of an asset being listed on 2 different platforms. But in that case, at least with Overstock, it was the same exact asset that was trading on 2 different places. It's going to be interesting to see how these 2 assets, between the equity listed on the Canadian Stock Exchange as well as this revenue share component on the security token exchange, it'll be interesting to see how those things are correlated and which ones move up and which ones move down.
Definitely some pioneering stuff, to say the least. And if you are interested in their IPO, it is worth mentioning that it's still open. It actually ends April 17th, so it is still live for you to participate in if you're interested.
Definitely go check that out.
But with that, let's get into number 2, the DTCC. That's a Depository and Trust Clearing Corporation. They're actually the largest clearing and settlement provider in the entire world. They don't do billions, they don't do trillions, they do quadrillions in securities settlement across the entire world for exchanges and marketplaces listed around the world. And actually, they announced recently a partnership with ING and 70 other financial institutions, legitimate institutions, and they actually are going to be trialing out the FinP2P platform that's actually created by Onera. It was actually showcased at the Security Token Summit a few weeks ago, and it is designed to work with multiple blockchains and multiple custody providers and create a platform for institutions like this to go ahead and settle their trades instantly. So that's really cool stuff. That's the T0 stuff we're all looking for when it comes to security tokens. Huge value proposition, and they're in love with it. That's the institution saying, hello, we're looking for a solution, and blockchain is the answer.
And you may recognize the DTCC as they were thrust into the public lights just a couple of months ago or weeks ago at this point with the whole Robinhood scandal. You had GameStop and many of these other public market stocks that were flying off the handle and the prices were going ballistic. And the problem with a lot of the traditional public market infrastructure is that they have 2 or 3 days of settlement time from Herwig trading me 1 share, it can take 2 or 3 days before that's actually filed on record.
Business days.
Business days, exactly. So you're talking it could be even more when we're talking about a Friday. And so the problem really with that is that when we have these high frequency trading that happens now all of the time, thousands and thousands of shares that are being traded on a per second basis, it just doesn't really work to have a 3 to 4 day settlement time sometimes. And especially when you have these short and long positions, derivative positions that have margin requirements and many other things that can change on a day-to-day basis. All that stuff really needs to be upgraded. That's the gospel of security tokens that we're seeing, and it's great to see that the DTCC is beginning to embrace that and are exploring ways to make that a reality for all of our financial markets.
I'll tell you, this one almost won my company of the week. That's how big of a deal this one is, I think. Should we get to number 3?
Yeah, let's dig right into number 3. And number 3 is almost taking it fully in the other direction. We're talking about Realty and Mount Pelerin. And these are two of the most innovative financial technology players that we have worldwide. They're both focused on international investors, but Realty is a real estate tokenization provider based here in Florida in Boca Raton. And what they're doing is they're taking, if you've listened to the show, you certainly have heard me say this many times, but they've taken 75 real estate properties, they've tokenized those, which allows them to sell fractionalized shares of each one of those properties directly to investors, which then get to receive equity in the actual real estate property, as well as the rental dividends that come alongside it, which can be double-digit percentages on top of that equity appreciation. This is a pretty cool investment vehicle and one that internationally has really caught wildfire. And so Realty announced that they have a partnership with Mount Pelerin. Mount Pelerin you also may recognize because they also have their own equity that they've tokenized and they have listed on Uniswap's decentralized exchange. And so Realty and Mount Pelerin have come together to list and to issue these assets together. Realty is targeting that international audience. Mount Pelerin has the infrastructure built out through the bridge protocol in order to make that happen. I think this is really huge news because it's two heavyweights coming together to make things happen.
You gotta love the infrastructure coming together. Realty initially invested a lot of money, of course, issuing those 75 tokens on their own protocol that they had created, and now leveraging the bridge protocol. I know, for example, they're going to have app user experience improvements and things like that, as well as many of the other benefits that Mount Pelerin has already developed with their own technology stack. So that's awesome news.
Very exciting stuff, and they're integrated in the whole DeFi movement, so you should expect to see a lot of that being integrated moving forward, and definitely this was a big one that I wanted to hint at and highlight in our top 5.
Well, again, let's get to number 4 then, shall we? Number 4 is about XRP, the coin that is owned and developed by Ripple. And as we all know, they are embroiled in what we call the case of the year. So last year we had SEC versus Telegram. We did see that come to a close. But shortly before, in December, the previous term of the SEC under the Trump era, led by Jay Clayton, let a little prize go before they left. They said, hey, Ripple, we're going to sue you for unregistered security sales, which is what the SEC has been enforcing pretty much throughout their entire time since the ICO era. And so this is a big deal. Ripple is one of the longest standing and largest cryptocurrencies around in the world. And so the implications of what the courts decide for the XRP token potentially being a security or not, that's really what's at stake here, could have a lot of important effects, after effects as a result, precedent that gets set in court. We may see more lawsuits fly. We may see an actual new cryptocurrency framework get developed. Who knows? This could have major, major ripple effects. But let me give you the update on the XRP case there. What happened was actually the first big news is that last month, a third party tried to come in and intervene and also participate in this case. This does happen. In this case, it was actually the Deaton law firm representing over 6,000 different Ripple XRP holders, I should say. And ultimately, they said that the SEC basically caused them damage, about $15 billion worth of damage. And that's, of course, when the SEC came out with their announcement in December, the markets went into free fall. This could cause the whole token to go into shock and be useless and worthless, if you could say. And then, of course, actually, some of the major exchanges like Coinbase went ahead and delisted XRP, making it very difficult for holders to sell and making it very difficult for anyone else now to get in. So that had a big deal, and they said, they don't like this. But actually, originally, the court said, this has nothing to do with our case until we figure out whether it is a security or not. And now they've gone back and reviewed, I should say, and they have actually approved this new third party to intervene and participate. So that's a big deal.
Wow.
And actually, maybe that's part of why XRP is on a 2-month high right now. Or it might be because the SEC also had some of their documents removed and redacted because they weren't relevant to the case. So signs potentially more good news for the case. And then finally, CEO Brad Garlinghouse of Ripple Labs actually came out and said that he found that the case was actually ironic, mostly because they were trying to charge Ripple for selling unregistered securities, but the whole point of this court case is the SEC doesn't know whether it's a security or not. So lots of things going on there. Needless to say, he thinks the company will be fine no matter what, as Ripple's payment networks, he says, are at all-time high when it comes to transactions. So we'll definitely continue to keep you updated on this very, very important legal case.
There's definitely a lot of chatter around all of the blockchain and crypto communities that the SEC is on unsteady footing here with a lot of their case, and it does seem like having to redact and take some steps back does make it seem like they're not quite as confident as they were before. There was an April Fool's joke going around. They had settled. They have not done that. But you never know what could happen in the future, especially as this case continues to drag out, if they may look to find some kind of settlement in order to get a win for both sides. But I think really what you really pointed at, and we've talked about this on the show before, is that I really hope that this is an opportunity for the SEC to begin to define some of these guidelines for digital assets and security tokens. There's a lot that still needs to be clarified and still a lot that needs to be officially recognized by the regulators.
It's true.
As we talk about here on the show all the time, everything we do is fully legal, 100% compliant, but it's almost like we're trying to fit into existing regulations instead of being able to have digitally native opportunities to take advantage of new developments and new innovations. So I hope that they take an opportunity here to really help define that and provide some additional clarification.
Especially given the fact that these are existing regulations that were created 80 plus years ago.
Right.
So in some cases, the idea of tokenized stocks and investment opportunities certainly was not on their mind at the time.
I don't think so.
Let's hope we can adapt and modernize like many other countries have, but it's not going to happen in the next couple of minutes. So let's get to number 5. And number 5 is actually about a issuance platform in the space called Polymath. So Polymath was one of the first on the block, if you will, and they actually raised a $40 million ICO. It was highly touted, and they're actually now building a purpose-built blockchain for security tokens called Polymesh. Now, nothing really here to do about the company, but it is worth pointing out that their very well-known CEO, Trevor Kverko, recently found himself arrested for sexual assault allegations. So definitely a very serious matter. Now, the problem that we have here, most importantly, is actually that Polymath has gone ahead and acted like nothing has happened. In fact, they've gone back to previous press releases, and we can confirm they have changed and scrubbed out Trevor. And actually, they have put in an interim CEO, a new CEO, and haven't acknowledged at all. And so this is my actual opportunity, since we have this outlet, to say that's not, I think, good business practice, Kyle. I think when something like this happens, the company needs to acknowledge it, they need to get out ahead of it, and they certainly need to distance themselves and say they obviously don't approve any of this type of conduct. The wrong thing to do is to go out and pretend that it never happened and hope that no one ever notices, because let me tell you, the industry is definitely aware of what's going on here.
Yeah, this is really shocking news. We just certainly need to wait for all the details to come out before we can make any conclusions, but thoughts and prayers for everybody affected by the any potential incidents that happened. You certainly hope that these allegations are false, but it's looking pretty grim. So this is just quite a case, and you hate to see it. So it's just terrible stuff.
And that's the top 5 most important things you need to know about last week. With that.